Progressive Snapshot can save you money based on how you drive and how much you drive. So the safer you drive, the more money you could save. Now, if you didn't hear that because you were looking at your phone while driving, let me say it again. Seriously, put down your phone. That is so unsafe. If you didn't do stuff like use your phone while driving, you could save money with Progressive Snapshot. But saving or not, just put it down. And if you did hear it the first time because you weren't looking at your phone, nice work. You'd love Snapshot from Progressive because it rewards safe drivers. Progressive Casualty Insurance Company and Affiliates. Snapshot not available in California and North Carolina or from all agents.
Dad is the smartest guy you know, so give him a gift that's just as smart. Like a battery-powered smart doorbell from Google Nest that lets him see what's happening at his door and answer it from anywhere. The Google Nest Doorbell is now on special buy for only $129.99 and works on any home. Find the best and smartest gifts for Dad. Feels like Father's Day at the Home Depot. How doers get more done. Offer valid through June 19, 2022 at participating U.S. stores and online. Limit 5 per customer.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat, smiley face.
Well, hello and welcome, everyone. Welcome to another amazing, adventurous episode here in the China Shop. Get on inside. I'm Shopkeeper Dan. With me, as always, is Kyle, creator of FinancialIneptitude.com. How are you doing today, Kyle?
I'm feeling a little embarrassed. I mixed up the times in my head and now wishing that Musk had already bought Twitter so we can get that edit button.
Oh, you sent a tweet about the time?
No, it was a DM. I don't know if.
Oh, okay.
I don't know if his plan is to help make DMs editable too, but hopefully that's coming.
Yeah, you send a lot of questionable DMs you'd like to change later after the fact.
Just to make me look stupid.
Oh, wow. Okay. What a weird start to this journey. We are joined today by the lovely folks from Designated Quizzers, Jason and Lisa. How are you guys doing today?
Oh, I'm doing good. I'm actually having a pretty good day. I got to go to Walmart and spend money.
Oh, okay.
Everybody's favorite pastime.
For stuff I don't need.
Got to see inflation in action.
Oh, well, Walmart's keeping it pretty, except for the steak. I had to walk away from the steak. I was like, whoa.
Well, actually, the inflation may not necessarily just be an increase in prices. You have to look at the package sizing, too.
Yeah.
Mm-hmm.
Like I noticed that the same litter that I get for our cat, the box like shrunk by like 4 pounds.
Yeah,
wow.
Even though the picture didn't quite look the same. It's like, so they're figuring out sneaky ways to pass the costs on to us.
Oh, yeah.
Mostly it's through portion sizes at this point.
Yeah, I've seen that strategy happen for the last couple of years, and even at the grocery store with bread and everything. And I'm good as well. I'm Jason, so thank you guys for having us.
Man, what's the other one that always drives me nuts? The peanut butter with that stupid concave bottom.
Oh.
Like, that doesn't help you get the peanut butter out. That's just a way of screwing you out of peanut butter.
That actually makes getting the peanut butter out worse, I think.
Right? You need one of those special spatula things. Or what's the other one? The stamps on the candy bars? Like they're just screwing you out of chocolate by putting that Hershey's logo in there.
Oh, well, I never thought about that it's a fraction of a fraction, but it makes sense. It's like, when you stamp Hershey's into multiple candy bars, or you cave in the bottom of mayonnaise jars.
You're just paying for air.
Yep.
Just saving. Yeah.
Welcome to beginning investing. How they get you.
This is why you should be scared of everybody.
Yeah.
Right.
Speaking of beginning investing, Jason, it sounds like you're the one that has a little bit of experience. Lisa, you're a complete beginner, if I understand things.
Yeah. The most I've done is I've made Jason sign up for Acorns a while ago, and all that did was get us a boat. So that's a true story.
Wait,
got you a boat?
Well,
because we saved all we really did was save money in an account that wasn't our bank account. We really didn't get any extra from that. It just, in fact, I think we probably lost money with the fees.
Fees and inflation.
Yeah. Exactly.
Jason, what about you? What's your experience?
Yeah. So, I mean, it's limited. Back in high school, I learned how to, somewhat read charts. And again, that was 30 years ago. So I'm sure that the concept is the same, but I'm sure the tools are different. I've had a couple 401k accounts, through work and all that, but really nothing, on individual stocks or anything like that. And that's, my level of interest is trying to figure out, if there's a better way, what it is, how to do it efficiently so that I can, actually not A, be terrified, and B, give up. Yeah, and that's kind of the summary of me.
All right. Well, are you ready to be rich?
Oh,
there's another button for that, isn't there?
No, just kidding. You're on the wrong show if you're ready to be.
We're more like the Tim Taylor of investing. Like, we try to show people what not to do.
okay.
But in the process, we have learned some shit.
We got the theory down, but the execution, you're gonna get some wild results.
I'm just curious, Jason. What did they teach you in high school 30 years ago? Because they didn't teach me jack about investing or charts.
Technology.
I do remember it.
I remembered being taught it in technology.
Oh God. Technology.
Yeah, it's
I
weird.
remember it was it was really what it was the I think it was more how to watch the market and here we go. Now here's where where the high points where the high sell points and the low, like the upside down, the line was at the lower part of the cross and the other one was something along those lines. So
were they teaching moving averages?
Maybe that's what it was. Yeah, I'm going to go with that. That sounds great. It was moving averages they taught me.
Was this economics class, a finance class? Like what class were you learning this in?
Again, it was 30 years ago, so I remember very little of it.
Okay.
But I want to say it was math. It was math, just regular. Maybe it was economics. Now that I think back, it might have been economics.
I never took economics, and I swear to you that I specifically remember the teacher and the class and wondering why our technology teacher was teaching us. Well, I got none of it, by the way. I completely failed. He was like, get the newspaper and flip to this page. And, that's where all the, like for me in numbers and math, I'm horrible. And so it was terrifying to me. I did not understand it at all.
And that's why you're buying those damn Hershey bars with the holes.
Yeah. But I remember it.
Goddamn holes.
Yeah. Distinctly. It was technology, and I have no idea why it was part of it, but it was.
Huh. Sounds like budget cuts.
Right.
I don't know. They ran out of wood. Electricity was high in the 90s.
Right. All right. Well, where should we start, Dan?
Oh, I think we should start on what they possibly would want to learn to utilize stock knowledge.
I think the first thing you have to understand is what the actual markets are, right?
Yes.
Have you heard the term competitive auction before?
I've heard a lot of terms. So yes.
Oh, okay.
Well, not those, but yeah. But yes, I have heard that one.
Have you ever seen an actual auction take place?
Yeah.
No.
You got the guy who's out there calling, do I have 100? Do I have 100?
Oh, yeah, that kind of, yeah, sure.
In movies.
Yeah, no, so, not in person, yeah.
If you think of the marketplace as that's kind of what's happening. You've got bids and asks. You have a buyer and a seller. You've got somebody that's trying to sell this product, and then you have people lining up trying to buy the shares of this company. Or in the case of a auctioneer, you got artwork, right?
Right.
The thing will sell at a fair price because that's kind of what the thing is designed to do, right? The person's only going to bid as much as he's comfortable paying, and the seller won't let it go unless he's comfortable taking.
Let's back up. I think you're starting
to
run
too far?
You're going to run a little bit.
All right.
In a regular auction that you'd see on TV, they'll have one thing, and the auctioneer is like, this one thing is for sale. Does anybody want to buy this one thing? And then everybody starts bidding on it.
Yes.
But in a competitive auction where you've got something like stocks or commodities, there's more than the one thing. It's like, oh, we've got bicycles for sale. We're auctioning all these bicycles. This brand, they're all exactly the same. So the price of this brand is going to be found not by one buyer and one seller, but by many buyers and many sellers competing at the same time.
Thank you, Dan.
Everybody who's selling the stock or bicycles, if you will, they want the highest price, right? They want to sell these bicycles to make as much money. And everybody looking to buy one, well, they want it as cheap as they can get it.
Does that make sense?
Yes, that absolutely does make sense.
Okay. So now, just like at an auction too, like emotions can really get involved with with the bidding. I'm sure we've seen that. Like that's what the whole point of the auctioneer's voice is designed to do, is to invoke, FOMO, like people getting afraid that they're going to miss out on this item. So they start bidding more and more and start chasing the price up, and then suddenly price has gone ridiculously high. Somebody bought a bicycle for $4,000 when it's worth $1,000.
Mm-hmm.
The markets, basically, the point I'm trying to make is that the markets are emotional. They're driven by emotionalities and irrationality, but they're also predictably irrational. That's where the chart reading comes into play, the technical analysis. So when you were looking for those high points and those low points, what you're looking at is basically emotions on a chart. You're looking at greed and fear.
So the thing that confuses me, and I forgot that I tried just buying some stocks from what was it, Cash App, where they have the portion where you can buy some stocks, and I think I did like $1 on each one or something dumb. And I was trying to figure out how you choose them, because to me, it's like, well, all of this is, I guess you would say, in the green or whatever, and up so much, and it gives you the suggestions of what you should buy. And to me, it looked like betting on horses. Well, yeah, this could be like, but okay, well, if it was that easy, everyone would do it and everyone would have money and everyone would be throwing all their money into the stock market. And well, what do you do if you just have $1? I know that there's these stories where, I did this and then I'm a millionaire, and it's just a fluke. So,
right. Well, the $1 to millionaire is very, very rare, and not actually the path that you want to take to success anyway.
Right.
Successful traders, I think they say, when retail loses, when like an amateur loses, he loses big. When a professional trader loses, he wins small, is what the saying is. I don't know why I brought that up. All of a sudden, I'm just talking to talk now at this point. Sorry. I lost my train of thought.
I was waiting for you to tie it together. So really, if you're trying to pick individual stocks, it's a lot riskier than if you're trying to just invest in the market or an area of the market.
Yes.
So knowing your own goals really informs, to me, what you want to look for to be learning. If you're looking for, like, I want to take this $100 and I want to trade it, I want to grow it riskily with high risk, then there's some ways to look for and find stocks that have a higher probability than others. But for most people, the way to go is to dollar cost average into the market itself, or
a specific sector.
Yeah, a specific sector. Like, I like pot stocks, so I might dollar cost average into some pot ETFs, some marijuana ETFs.
Oh, you're going to get Jason there, because Jason's trying to build a business. So,
okay. Are you familiar with ETFs?
No,
it was the pot
really.
thing.
So essentially,
not ETFs, Kyle, marijuana.
But no. So what I heard from you there was essentially very similar to what we know to be the 401k, arena is, invest in a pool as opposed to, a single drop is what I'm hearing.
That's more, if you don't have the time to dedicate to looking at charts like every day of the week, then that really is the best path to go. Pick a sector that you like and then dollar cost average into it, because then you don't have to worry about trying to pick highs and lows. When you're dollar cost averaging, you're buying the lows and the highs. And then over time, the markets have an upward bias, right? What's the average return is something like 10% per year over the last 20 years. This year, maybe not so much, but 10% minus inflation.
Yeah, that's the number thrown around.
I have a question, and because I'm so, I just don't know anything about this at all. But the one thing that I always wonder is, how do you know what the rules are of selling? Because you can't just like sell and right away, or right? Isn't there like a period of time you have to hold on to the stock before you can sell?
That all comes down to the taxes that you want to pay.
Okay.
Like for an individual stocks, like if you don't hold it for more than a year, you're going to be taxed at a short-term tax rate, which is basically like ordinary income. But if you do manage to hold it for over a year, then you're taxed at long-term capital gains rate, which is much, much cheaper. That's why everyone says that rich people aren't paying their fair share, because all their assets are tied up on like the stocks of the companies they own. So whenever they sell them, they've been holding them for decades.
Oh.
And they're paying a super cheap rate.
Oh, I didn't.
Yeah, I get it.
Wow. Okay.
Right. It's a super hard thing to tax because the thing has no real value until you actually sell it. You have no idea what it's going to be worth tomorrow.
Hold on, Kyle. It has no real value until you go to get a loan, and then all of a sudden it's an asset with value.
That is an excellent point.
It's got value, just not to the tax man.
Right. It's a tricky subject.
Yeah. Well, it's designed to be tricky because it makes it easier to exploit.
Mm-hmm. Sorry.
So
tangent.
Oh, I have one more question, and then I'll let Jason say something. But this is going to be dumb. But I want to know what is this that people go to jail for when they do insider trading, like Martha Stewart? What does that mean?
That means that you are making trades on information that is not publicly available. Like if you had a friend that worked at Apple and then he called you up and said, "Hey, buy Apple stock. The earnings report's going to be amazing."
Oh,
yeah. We just had some software engineer get put in prison for insider trading Netflix. He had access to the Netflix subscriber data before the public did.
Mm-hmm.
So he was able to call up his brother-in-law and his brother and tell them, "Hey, the subscriber numbers are better than they thought. Buy some call options. Hey, the subscriber numbers aren't as good as they thought. Buy some put options."
Wow. How do you get caught at that? Like, how does it even happen?
That's a good question. No.
They particularly got caught because the brother and the brother-in-law didn't make any losing trades. They only were trading Netflix, and they always won. And the brokerages themselves started the investigation and blew the whistle, because the best traders in the world, you're gonna have some losers. It's just a fact. But it is hard to catch. It can be hard to catch.
So
good questions, Lisa. I like this.
Yeah. Good stuff.
Even Warren Buffett loses sometimes.
That's right.
It does.
That's right.
I once worked for his company. one of the many companies.
Right.
Was it Geico?
No, it was the Buffalo News. It was for what was this company that he sold? Berkshire Hathaway.
Well,
did he sell it?
No.
He sold the Buffalo. I'm sorry, he sold the Buffalo News to another company because it wasn't worth anything anymore. I just had the wrong info there.
Are any newspapers worth anything these days?
No. Yeah.
Jason, what about you? You got any particular burning questions?
No, I think back to where we were. I think I just my questions are really more strategy based, and what your guys' experience and opinions are as to how much time is needed to be somewhat proficient in it. Just the basic strategy on that and. You had sent me, in the email conversation we had, options and stocks, and I'm not familiar with options. So, just kind of that basic, knowledge that maybe I can take and do something with.
Let's come back to options in a minute. Let's start with the time.
Are you currently looking at stock charts, and where do you go to look at a stock chart?
I'll be honest with you. Every time I think I want to tackle this, I start looking and then don't really know where to start or what to specifically look at. I understand the basics, but probably the wrong place is the answer. Whatever sensibly I can find online.
What would you define the basics as?
Basically just following a particular stock, maybe.
You pull up the chart and look at it and try to make a decision based on what it looks like.
Right.
What's the most recent chart you looked at?
Geez, I don't know. It's been a few months. So,
do you have a favorite company that you like to keep tabs on?
Not necessarily.
You're always mentioning Apple.
Well, everybody mentions Apple, but no, not necessarily. What I've started to learn was that there's hidden smaller companies that a lot of people talk about, but then there becomes that guess of which one's the next Amazon. You know what I mean? Because sure, Amazon had a 8 gazillion % return if you had bought stock back then, but sure, a lot of people have bought a lot of stock that they thought was going to be Amazon and didn't turn out to be Amazon.
That's where that diversification comes in play. But that's why Dan was talking about sectors. Like one of the guests that we talked to recently, the creator of the Skydle tokens, he used to run a hedge fund, and he was convinced that space is going to be the next $1 trillion market.
Mm-hmm.
Huh.
So if you subscribe to his belief, then you'd want to be loading up on pretty much any ETF that's involved in the space sector, or picking out like a basket of like all the different stocks that you can, and then investing in a little bit in all of them. Yeah.
These 6 space companies, of these 6, 1 or 2 of them will be huge. So you diversify into those. So
you can try to do like your own ETF is basically what you're doing in that scenario.
But that takes a lot of research, because then you're researching not just the 6 companies you picked, but you're going to be going through, many more to weed out the ones that you don't think are going to be worth it. It's called fundamental analysis, and it's a lot of people's full-time job.
Yes. And when you're doing that too, you're investing that with the time frame of like decades. Like you're looking to park some money in it now, and then you're probably not even going to look at it for another 5 years.
Wow. Yeah.
That's very hands off. It's one easy way to do it where you don't have to think about it so much. You just make some bets on the different sectors that you think are going to be stronger in the next coming decade. And 10 years later, collect your rewards.
We're too old for this.
Well, but that does factor into it, though. That definitely does factor into it. When you're,
do we want to work until we're 70?
When you're young, they teach you, just start investing in your, 401k. Go back to that, but that. And be conservative. But when you're, in your mid 40s, your outlook is different. So
that's a shame too, because when you're younger, your risk tolerance should be like the max.
Yeah,
because you have plenty of time to make up, any missed times. If you first started investing this year, your portfolio would be looking like shit. But if you're 20, that's much less of a problem than if you're 50.
Yep. Mm-hmm. Yep. Absolutely.
There was something else I had to say about what is okay. I really truly don't know what this is, and I know that it's all over Twitter and everything. But what is virtual currency, and is that like a stock? What is that? Is it the same thing? Is it investing? What is it? What is cryptocurrency? What do you do with it? Like, I don't know. I get asked like daily 4, 5, 6 times a day if I want to invest in cryptocurrency on my Twitter, and I have no idea what they're talking about.
You were on podcast?
Huh? Hello, sir. You have Apple Podcast?
Right. Dan, do you even feel comfortable answering that? I still don't know what crypto really is.
I'll answer that.
Okay.
Cryptocurrency is, as of yet, legally undefined. And there, in fact, currently is a bill in the Senate, a bipartisan bill that will define it as a commodity, much like silver and gold.
Oh.
And it's just because it's digital, it's not something you can mine from the earth. They make up busy work. Like a crypto miner, they're not solving the world's problems. They're solving busy work with all those computers just to prove they did the work to earn the digital currency, because that commodity, it can just be created ad infinitum. You can create as many as you want because it's digital, right? I guess it would be how much hard drive space
Depends on the algorithm too. I think Bitcoin has a cap on the number of solutions.
Yes,
right?
any currency can have an artificial cap.
Yeah.
We are talking about something that is just created like any file. Like you create a text file, you can create as many of them as you have hard drive space to fit. The commodity definition, I feel like, is the closest thing you can get. Is just a digital commodity that we use things to create artificial scarcity.
The tough thing with it, is that the thing that gives it its value is everybody's belief in it. But you can say the same thing about real money,
fiat currency.
Yes. At least that though has a government backing it, and more than just I don't know.
More than just belief.
More than just algorithms solving ledgers. But cryptocurrency's also been around for, survived for quite some time.
14 or 15 years now?
I think it has potential, or it has use cases. It's just, it's not really for me.
Okay, so it's not even close to the same thing, basically. What it was, I didn't know what it was, and I thought it was similar to to investing in stocks, but
it can be similar. You can still perform technical analysis and try to chart momentums and support and resistance zones and those kinds of things. But if you want an easy way to start, I would stick with, blue chip stocks and then practice on those, because even if you're wrong, you're not going to lose much.
Yeah. And the big difference too is a blue chip stock makes money because there's a business involved that's doing a thing,
right? Either
selling a product or a service of some sort, and they've got earnings. Whereas like Bitcoin, there's no Bitcoin earnings for you to get a dividend on. That's why it's more like a commodity than a stock. Like you could you could go on an exchange and you could trade wheat. You could trade corn if you wanted to. Like there are people who do that. It's probably more akin to what trading cryptocurrency is, but it's the Wild West. So there's a lot of lottery tickets. A lot of people have made a lot I'll throw $100 in this thing, and then it blows up and they get some real wealth. But
and then they write a book and then telling everybody how to get a Lambo. Just do what I did. Get lucky. Yeah. Buy these lottery. Win the lottery. Why don't you just win the lottery?
Yeah. How hard is that? Come on, guys. Get with
these dice.
We can just drive 5 minutes to the casino. It's about the same thing.
It is kind of the same concept in a way.
Although at least you sometimes get to redeem it for less effort. It's not all or nothing like the casino is for me.
Yeah, well...
Watch me turn this $100 into nothing.
Into dust.
That's about about where we're at when we go there.
Claim dust as a commodity now.
Yeah.
So have you ever heard of TradingView?
TradingView? No.
It is an excellent free website that has an client app that you can download, but it's really, really good for actually trying to practice your charting.
For looking at a stock chart, yeah.
They've got lots of different custom studies that you can throw on there, different indicators you can play with. And then the upgrades for some of the more features are actually fairly reasonably priced.
I will check that out. In fact, I pulled it up.
So, yeah. And I think you should walk through the basics of what a stock chart can tell you and probably why you want to switch to candlesticks.
You want to explain candlesticks while I mark up a chart to share?
Sure. So on TradingView, from the top left to I don't know if you've actually managed to load up a actual stock chart or not, but there are different types of charts. And the one people are most familiar with is just a line chart, where it just draws a line that tracks where the price was, right? So when the price is going up, the line just goes up. When it goes down, the line goes down.
Yep.
But that doesn't give you as much information as you could have at your fingertips with something like a range chart or a candle chart. We'll stick with talking about candle charts for the time being. The candle chart will also go up and down. That follows and tracks the price. But instead of just an even line, you've got these series of rectangles. And say that each rectangle representing a different period of time. You could do 1 minute, you could do 1 month. And that candle is going to be one of two colors, whatever you set. Normally, though, they're red or green. And that tells you if it ended that period lower or higher than it started that period. So you're going to get in one candle, it tells you all that information, where it started, where it ended, and then it's got a line of like a candle wick or a line on the bottom, like the tail. It's going to tell you how high or how low it got in that time period. So it gives you all of that information very quickly in a candle, almost telling you the story of, in this 5 minutes, the price just shot from here, it just went straight up. It didn't have any pullback down at all. It just one big, block. That's one type of candle, or it might be this tiny little body with this huge line of a wick because it got all the way up there, but then shot all the way down in that 5 minutes.
And that actually is what I remembered as I'm now looking at the candle chart from Trading View. That's what I remember, and I didn't know what to call it. It's the candlestick that. Yeah.
So you learned that in high school?
Yeah, wow, I did. Yeah. Yeah, and I retained enough to know not what to call it, but
nice.
But I'm looking at, and of course, when you pull it up, of course, Apple is the first one that came up, and it's on a 1 day, cycle here. But I'm looking at it, so I see the greens and the reds, and yep.
Yeah, nothing wrong with Apple. It's got the largest market cap of any company. So one of the things, if you're not doing like a long-term thing, if you're doing like short-term day trading, a big company like Apple means there's a lot of people out there that want to buy and sell it. So it's got a lot of liquidity. There's always contracts to be bought and sold. So it's much more attractive to day traders.
Yeah, you don't have to worry about selling it when you're ready to sell it. There's somebody waiting all the time to buy
it. Yeah.
Mm-hmm. Every trade is matched between a buyer and a seller. So illiquid stocks, like a lot of the penny stocks you see people pumping on Twitter, are very illiquid. So when it comes time to try to get out, you can't find anybody to buy it at the price that you think it's worth.
I've got 1,000 shares. It's up to $1. Who wants to buy them? Nobody. Crickets.
Yeah. Well,
guess what? It's not really worth $1, is it?
Yep.
Yeah. So that actually brings about a very good question, and that's the thing. I mean, there's not, and you just said it, there's not always a buyer out there. You may have the perfect time to sell or whatever, but that you got to have a buyer. It's like any other.
You won't, with today's markets though, you won't ever be like unable to sell completely unless it's like an over the counter. Market makers, the people who execute these trades that match you up with the buyer and seller, they typically keep volume of stock on hand so they can execute if there's nobody they can match up. But you're not getting the price that you'd get from somebody else if the market maker's providing that liquidity.
It's like if you've got a guitar to sell and you can sell it to that guy down the street for what it's worth, or you can take it to the pawn shop. Pawn shop's not going to give you the price you'd get it selling it to the guy down the street.
Right. That makes sense. Did you have something you want to say? Because I have another.
So, okay, we were talking about. Okay, all right. So you said it's time to sell. Okay, but then who's going to buy it? So then, how do you know when you're buying a stock? Well, when it's time and when this matures to the point to where I feel comfortable to sell, how do you know in the beginning of what's going to have a buy? Do you know what I mean? Like, how do you judge what will have a buyer in the end when you're ready to sell? Is there any way of telling, whether you're investing in something that's someone's going, because I would assume things hit their peak and then they could go down, Amazon could be the biggest thing this year. And then next year, something new could come along and then there goes Amazon. How do you, or is that why long-term is better than day trading? I don't know the difference. What's better? To
answer your question, like, knowing when to sell is a personal choice. Everybody's got a different time frame here. And that's what makes the competitive auction. That's what adds a little chaos to it, because exactly what you're saying, like when one person wants to sell their stock, another person wants to buy it. Who's making the right choice? Well, it's up to those individuals to know if they've made the right choice or not. Is it going according to their plan, strategy, and goals? So if I'm a day trader and I'm trading some pot stock, I want to get rid of it because it's not going my direction right now. But somebody else who's like, I'm long on the pot industry and in 10, 15 years, it's going to be huge. It's right to buy for them today, right now. They want to buy my shares at whatever price it is. They don't care. give me more, give me more. So only you know whether it's the right time. But if you're asking like, how do you know that Amazon turned the corner and their stock is going to be going down now instead of up for however long?
That's where structure comes into play.
Technical analysis. Yeah. Being able to define structure on a stock chart, it would give you a point on that chart to say, if it gets below here, I want to sell and wait for it to get either just be done with the stock or wait for it to get back down here to get to buy back in.
Okay.
I just shared a link in the chat box for a chart this is British Petroleum, BP. It's a weekly chart, and then the red lines are the highs and lows of the impulses, and you can see very clearly market structure right here.
Yes.
And this is what you'd call a bear trend, because the highs are moving lower and the lows are continuing to move lower.
Mm-hmm.
So if you're actually long BP, where it's at right now is not too far from where you should be looking to exit it, because it's hitting a resistance point or getting close to a resistance point of where it's going to start continuing the next leg down.
Mm-hmm. And I remember that too. That was the other thing that I actually remembered is, and you're putting terms to, to these items, but the resistance points and all that, where there's those peaks, and so I could see that's the impulse, and then back down. I see what you mean, mm-hmm. But the overall trend is headed downward. So, what is the time frame on this? Oh, this is a long term.
These are weeklies. Yeah. Each candle is a week.
1 week. Yeah.
Yeah, and this is dating way. So in other words, it's just saying way back in 2002, to now 20 years later, overall, this has been a loss.
This has been very bearish. But if you were buying on these dips and selling at the peaks, you can still make money even on a bearish trend stock.
Right.
That's where the time frames that Dan was referring to come into play. The extreme long-term investor probably shouldn't be holding this stock, because unless he's buying it at these lows, anticipating it to turn around at some point.
And you like your point of Amazon. At one point, Lisa, British Petroleum, they were just some big oil company, very successful. Like back 2007, they were up to like $76, $80 a share. I don't know what that analysis would be, but I'm certain there were people out there looking at British Petroleum as a business and a company and how they behaved and what they were doing. And then we're saying, you know what, these guys, they'll never get better than they were 2 months ago. We talked to a guy, Ross, over at ChangeBridge ETF. They're short IBM because on their fundamental analysis and what IBM's business share is in the different places they compete, they feel like IBM's just positioned to do a little bit worse every earnings call. And if you load up IBM's chart, that's what's happening, right? Like it's the two different methods of analyzing a company's stock. What Kyle just brought up, the technical analysis, finding those highs and those lows and saying like, oh, if it gets to here, then I'll do this. But then there's also like, oh, wow, AMD is pushing really hard to be the best processing chip company, and they're doing all these things to get there, and I believe in them, so I'm going to start buying every dip. That's the other thing, and when you combine the two, that's probably the most effective. But usually, you only got time for so much. You only do so much with your time.
Yep.
So did they teach you how to draw support and resistance lines on those charts 30 years ago?
Perhaps.
That's a very simple thing that you can do if you're looking for something to start practicing to try to get familiar with charts. And that's just drawing lines connecting 3 points or more.
Yeah, I'm staring at the BP one and I'm absorbing this, so I can see that by trend every, 2-ish years there's a growth. Well, maybe 2 to 4 years there's a growth, but then that high point takes another, year and a half. So it's like a 2 to 4 year cycle every one of these steps, it seems.
Mm-hmm. Here's the crazy thing. So this is where technical analysis, there's more to it than just throwing some lines on there. You need to start with the weekly and then work your way down the different time frames to try to find where all those support levels start to combine. Like if I show you the same chart on the daily from 21,
it's probably going to look really bullish.
What's the term? Markets are fractal?
Markets are fractal, yes.
Yeah, I see 21.
So here's that same chart, but starting from November.
Oh, so you just took a small section and so
yeah,
now
he took a day.
And now it looks looks like a totally different setup, right?
And if I zoomed it into the 15-minute chart or the 5-minute or the 1 minute, like each time I take a smaller section, it kind of looks the same almost. Like you see the same structures appearing, the higher highs and higher lows, and that's where that trying to figure out your time frame becomes important.
Yeah, I see. Yeah. So yeah, because if you're a long-term investor, you're like, oh, this looks great, but you're only on a day.
Where it's important is if I'm the short-term swing trader and I bought this stock when it broke out above my 28 level. When it broke above $28, I thought, okay, I want to be long. This is breaking structure. I want to see how high it goes. I didn't have that weekly level showing me that there was a previous high at 36. Then, well, now I at least have a price target. Like I know that long-term investors are probably watching for this to add to their short positions for the next continuation leg lower. Like as a short-term investor, you need to know where the long-term people are. The long-term people don't necessarily care about anybody else.
Yeah,
that makes sense
for sure.
Knowing your time frame is very important, but also being aware of what the other time frame people are thinking is you got to be aware of both, I guess I'm trying to say.
Right. So in terms of, most people are in the long game. Am I correct in saying that, or is that just what I perceive and that's not accurate?
I would say yes, but that's because that's just the way the markets are biased. The markets have an upward bias.
And most of the money in the market is playing long games. Like you've got a lot of hedge funds where like pensions will get invested in, and they're not being traded so actively.
Oh, I see where okay, that makes sense.
What's a hedge fund? I've heard that. I don't know what it is though.
There's a little blue guy that spun around, collected rings.
He just
Hedge fund is it's like an investing strategy where they get a small amount of capital, but then they leverage the shit out of it so they can make outsized bets and try to produce outsized market returns. So like if you give them, $5 million, they can buy $5 million worth of a stock, margin that stock to get another 50% buying power, and then go short a bunch of other things and then carry positions that are probably double what the actual equity they have to carry or even more.
Just think of it as like an investing company. Like somebody's like, hey, who wants to throw their money in my company? I'm going to use it to do stock stuff to make money.
But normally for the ultra rich, and we're not allowed to play.
Correct.
Which is a good thing because most of them don't do so well.
Yeah, sounds.
So that leads me kind of into my next question. So for people like Jason and I, where, we have decent jobs, but we have also a lot of expenses in our life, and we don't have a lot to put into the stock market. And he's turning 47 and I'm 45. So because we haven't done any of this thus far, where should we start? Where is a good place to start for people who don't have a lot of money and are older?
Do you have a 401k through your company?
Yes.
Yeah.
Your employer, I mean?
Yep.
Mm-hmm.
Do they match your contributions?
Yeah, I forget because we just switched companies. It was kind of a buyout thing, but I don't remember what the match is, but yes.
Hopefully you're taking advantage of that because that's free money.
Yeah, I've learned that one a while ago. Yeah.
You did that, yeah.
The second, that's tough because everybody's different. I mean, do you have debt that you got to pay off? You may need to actually sit down with an actual financial planner.
Yeah, other than house and cars, which
we just have our house and cars. We have no debt. Mm-hmm. Yeah, other than that. Mm-hmm. But it kind of is debt because
it is debt.
But yeah, I mean, other than normal daily life, no. But Jason's still in the child support world, and so it takes quite a bit away from his income, and so
He's investing in someone else's future.
Yeah, and New York is extremely expensive to live in. The state is horrible. Yeah. So it
limits your extra funds.
Yeah, it really does. So that's what we're kind of looking for. Well, the little funds we have, what do we do with it?
There's no easy answer, and it's literally the only advice we can give is go see a financial planner and talk about all of your specifics with them. Mm-hmm. If it were me, I like picking industries I believe in, like the marijuana industry. Like I don't think it's going away. I think it's going to be way bigger in 10 years than it is right now. So it would be if this was me, I'd be taking it, what little, and I do this, what little I can get, and I'll buy.
You said doo-doo.
I said doo-doo. Ding, 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 ding. Yes, the magic word. Yay. Okay. Dollar cost averaging, like every paycheck, I might put $20 of YOLO, YOLO, the ETF that's got a basket of marijuana company. And then it doesn't matter if it goes up or down. I'm just putting the same amount, that small amount, just put it in and put it in. Because that, I personally feel like the time frame of the growth of the marijuana industry will match my goal. Space is another one, like I would personally look at.
Really, the SPY is another. Just buy the SPY.
But you can also right now, like, because we're in a bear market, I tell my nieces and nephews, like, this is a gift. Start buying the SPY or the NASDAQ, dollar cost average. If you start now, you're going to buy it all the way down. When it gets to its lowest, you'll be buying it. And then when it hits and starts going back up, you're going to be doing just fine.
Mm-hmm.
So am I correct in saying that the NASDAQ and the Dow Jones and all those are essentially sectors? Is that correct?
Those are indices.
Okay. Indices. But
indices. But they kind of make up sectors. Like the Dow Jones is an industrial mega cap. It takes a look at 30 industrial stocks. Although Salesforce is part of that, so I'm not sure how that really works. The S&P is mid cap, 500 companies. The Qs, the NASDAQ, that's tech stocks.
A lot of tech.
Yeah, mostly a tech sector on that one. So yeah, those are like the three main indices, and then that's one way you can do it. But there's also like specific arms of like the SPY, if like you want to invest in like the financials or utilities or
technology.
Yeah. Right. They have different funds that make up all the components of the SPY too. There's like 12 of them.
So I have to tell you something about New York with our marijuana industry here. So it's now in New York State legal to use and carry, and it's decriminalized, and they're in the process of deciding what the legalities are of selling recreational marijuana. Now, in Buffalo, New York, well, Western New York, medical's been legal for quite some time. I think that New York City, you can now sell it. I'm not sure about that. They may be doing the, trade for a donation thing still, because there's that gray area, which is how the reservations an hour away from here are getting away with it. Mm-hmm. And also they really don't have to follow the county's rules or whatever county they're in. So that's the thing is they're trying to decide in the municipalities what the rules are. And here, at least, they let everyone, every town, which, every suburb, whatever, decide what the rules are. And, they'll say, okay, here's the rules. And then, so-and-so votes this and that because they're 90 years old and they don't believe in the devil's flower or whatever.
Because they're assholes.
So that's just how it goes. So it's going to happen soon, but it was supposed to be in January.
He said the bottom line is though, that's a long-term, it's becoming accepted, and therefore there's
but especially like in New York State, because it's going to be huge here, is that the best thing to buy right now? Probably, especially because New York's on the cusp of selling it, the
industry is worth $61 billion and it's expected to be $100 billion in 5 or 7 years or whatever it is. So
you don't need to sell me on the pot industry.
Mm-hmm. Right. Yeah.
But it's at low prices. I mean, it's never been lower. So it's like if your dollar, especially dollar cost averaging, like I think now's a great time to start.
Oh yeah, well because I'm getting it here. I'm getting it. So now it's affordable right now. So buy it now, and then when it blows up,
if you're dollar cost averaging, the best way to think of it psychologically is you are Smog the Dragon and you love gold. Gold is your ETF that you're buying. Mm-hmm. Smog doesn't give a shit what the villagers say the cost of gold is. You ask Smog, do you want more gold? The answer is yes.
Okay.
The idea is to amass as many shares as possible, no matter what the price of the share is today. And then in the future, when the price is all the way up where we predict it will be, then it's like, oh, this mountain of gold is worth a mountain of gold.
Yeah. Yep. So, yeah. So I see what you're saying. So in other words,
acquiring phase.
Yeah. So, and dollar cost averaging, essentially what you're saying there is, let's just, if you're taking that $20 bill, that share that 1 week, that might only get you a share and a half 1 week, or it might get you 5 shares the next week, but you're still taking the same amount. Am I correct there?
Yes. Yeah. You're just averaging your cost.
Yep. Gotcha.
So then you don't have to worry. You'll buy less when it's higher and you'll buy more when it's lower. So it all should even out.
Unless, of course, the industry goes away.
Right.
Which in some situations could happen, I guess.
I mean, look at the space industry. Like, I mean, if there was a crazy enough war, like we might have a lot of industries survive, but it's like, well, we won't be to go into space for 50 years.
Is this space thing because of all of these crazy celebrities and a lot of them being the
Elon Musk?
Well, they're what is it? The Scientologists, where they're buying real estate in space or on the moon or something. Yeah. That. Oh yeah. It's crazy. I'm like, what are they doing?
I think the idea behind the thesis is that it's just the next frontier.
Yeah.
It's not the final frontier anymore.
Well,
no, it's the next frontier.
We don't know yet. It's the final one now, I guess.
I don't know. Is the multiverse real? That could be the next frontier after space.
Apparently, you're only going to be able to afford space, if you're a celebrity or you're rich, and the rest of us are just screwed. We'll be back here on Earth.
Yeah.
So, how much did a TV cost when they first came out?
Oh,
yeah. Everything has a way.
The rich get first crack at everything, but we like it that way because new things can be dangerous.
Yeah.
I'll wait. I'll let them take the first airplane rides across the channel.
Yeah, but when it comes to real estate, I'd like a first crack because that's usually the cheapest it ever gets. Just saying.
True.
I don't know that you can buy real estate in space. I think that's all common.
Yeah, nobody owns it yet.
Owns it, yeah.
Who are you going to buy it from? So if Scientologists are buying real estate on the moon, they're getting scammed.
That's what it sounds like. Yeah,
just saying.
They said something about, I don't know if it was like Nicole Kidman was one, or I don't know. I'll have to look it up and I'll send some links.
I've got a lovely piece of property on Jupiter. I'll give it to you guys. You can just have it.
Yeah.
I'm like Jason with the charts for stocks that he learned in high school. I don't remember what planets that we know of that are that you could live on. And
Jupiter, he just told you.
Is it Jupiter?
No, it's not Jupiter.
Does Jupiter?
No, Jupiter's a gas giant. You could not live on Jupiter.
Which one has the ring of death? Is that Jupiter?
Saturn, you mean?
Saturn? Yeah. I don't know. One has like gas around it.
It's also probably Earth right now. Probably not.
Yeah.
It's gas, right? Isn't it like deadly gas around it?
How did we get here?
I don't know.
The best place to live in space is probably Titan, in my opinion. I'll just leave it at that.
If you're referencing something about a movie and it has to do with space, is Titan a thing? Is that the new planet?
It's just a moon with an actual atmosphere.
Oh,
yeah. It's the moon we're most likely to be able to colonize the easiest.
Oh, well, there you go. That's the one to, that's the one to watch.
And that's why space is an investment now.
Yeah.
That's where I'd be buying my property. That's all I'm saying.
Yeah.
If it's not on Titan, I don't want it.
I don't know. I've got some condos on Ganymede.
Dad deserves double the thanks this year, so this Father's Day, give him the power tool system that has everything for every job. The Ryobi One Plus tool system now on special buy. Over 260 Ryobi tools powered by one interchangeable 18-volt battery. And for a limited time, when you make a qualifying Ryobi purchase, you get one select tool or battery free. Feels like Father's Day at the Home Depot. How doers get more done. Offer valid through July 31st, 2022. Valid at participating stores and online. Limit 1 per transaction.
You could save big when you bundle your home and auto with Progressive, but when we just come out and say it, it feels like it falls a bit flat. So instead, we're going to have someone else say it. Because for some reason, when a random person talks about how great something is in a commercial, it's more believable.
I saved with a Progressive Home and Auto bundle.
And there you have it. I mean, I'm not sure why she's more believable than me, but either way, you get the point about the saving. Progressive Casualty Insurance Company and Affiliates. Discount not available in all states or situations.
This guy's he's all about moving product here, isn't he?
Yeah, right. Well, that's what I do here in the shop. I move product. Speaking of which, folks, check out the shop online. We got some awesome coffee mugs, t-shirts, beer koozies, stickers.
Condos on IO.
Yo, we should start selling some more like Gwyneth Paltrow goop level madness.
Oh God.
Yeah.
Oh
boy.
Yeah. She had the candle, right? The vagina candle.
Of course she did.
Yeah.
What? I was not aware of that.
Look,
that's real.
She also had the pure gold vagina egg.
What?
Or was it jade? You shove it up your vagina so its healing energies rejuvenate you. Or some madness.
Who would want to do that?
The girl who sells her bathwater, probably.
Oh.
Yeah.
I don't know. This is so disturbing.
How big is this jewel? Is it like Romancing the Stone, or is it like an earring?
It was like $50,000, so I did not purchase one.
If it's
for my
jade,
vagina.
that's pretty big. I think jade sells like $300 a pound, rough cut.
Okay.
Well, they sell these jade rollers for your face. It's supposed to take the swelling down in your face if your face is swelled. And, and people buy them, and like you can get them all over the place. They're in every website, in every store. And it's really just rolling a rock over your face. Like there's
take down the swelling in your vagina.
Yeah.
I roll it over on the rollers.
Roll the jade over your vagina if you want to, but they say it does absolutely nothing for you. Nothing at all. There's no scientific backing.
I can tell you the swelling will go down once you stop using the rollers.
That's true. Or it's like rolling out your lawn, the big heavy roller thing to flatten out the earth. Right. You're just flattening out your facial earth,
spreading your bruise around.
I don't know, but I think we're starting to hit that time limit. Any other questions we want to hit before we sign off here?
No, I actually think I understand something now.
Yeah. Jason, as far as what I'd say for you, if you wanted to learn more, I mean, really, it's just practice.
Yeah.
Like it's all going to come down to screen time, and there's no shortcuts. If you want to learn how to actively trade, you have to be willing to put a lot of time into it.
Yeah, I can see that. And this was a good refresher for me because I actually did remember some of this, and it does make some sense. So I think it's enough to spark me to want to try, to really put that time in.
There's so much free information out there. I mean, if you ever find yourself getting stuck, just shoot us a message. We'll load you up with plenty of things to keep learning about.
Mm-hmm. I appreciate that.
We love having more people to talk to because the people who like finance love to talk about it. The people who don't know what you're talking about think you're an idiot.
Yeah, they don't want to hear it. They don't want to hear it.
Oh, did you mean to talk about stock charts? Here's why your stock is not going to the moon.
Yeah, right.
Well, you have a lot on your website too, correct? Because I was listening to the last episode, and
we've done quite a few beginner episodes. We've been trying to put together a knowledge center with some basic terms or all the things that we say that if you're new and jumping in, it can be really overwhelming.
Yeah.
What's a stop? What's a limit order? What's a futures contract?
Mm-hmm. What are all the things I can do?
Why was this a bad idea? All right, well, before we let them go, you guys want to tell us a little bit about the show?
Yeah.
And where people can find you?
Yeah, absolutely. The best way that we have lately described the show is to just simply ask if you remember the last time you had a little too much to drink. You tried to ask someone a question, but what you asked came out nothing like what you meant to ask. That's Designated Quizzers Podcast. So it's an adventure.
Oh, that reminds me. I have questions for you guys.
Uh-oh.
Yep.
Just review questions. Lisa, we talked about the markets and competitive auctions. My cat Calvin, I wanted to know if you knew what escape act he performed on Dan and I's cross-country road trip.
Oh, you'll probably know this. You're the pet interviewer.
Well, I know what our dog likes on his nachos, but
but this is about this cat.
It escaped the cat carrier and crawled into my lap. No, I listened to the last episode.
The Ask a Bull episode, yeah.
Sorry, I didn't mean to interrupt you there. I just had to get that one out.
That was so funny.
That is a great.
Yeah.
That actually is. Yep.
He got mad at me for that last episode. He was mad at first, and he's like,
and then
"What?"
Then I caught on to where you're going. So
I just really didn't want to take that shot at all.
Well, that leads me to the rest of what I was about to say. So there's an adventure in the questions, which thank you. You actually just did exactly that. And then, of course, the challenge is to guess the answers. But the quiz is merely for fun. We do learn some things along the way. And of course, we are trying to avoid the dreaded punishment shot, which is usually a messed up concoction of multiple ingredients and an alcohol that don't necessarily go together. Like, for instance, on the June 9th episode, number 29, one of us got stuck drinking a blended drink of tuna fish, guacamole, cheap cherry vodka, and grapefruit juice.
Oh my God.
What's it called?
It was called I Feel Sick. And apparently, wait, I can't tell you who took it, but
It was really bad. It was exactly what.
Oh, are you giving up
the day after a night of drinking? We
got to work on your marketing skills.
Yeah, no, it was.
Right.
Yeah, no,
we'll just bleep that out.
Yeah.
I feel sick. We love consequences, so that's definitely right up our alley.
Right? Isn't that it? And the rest of our spiel would be, of course, that you can find us on all platforms. I'm Jason. That's Lisa. New episodes drop every Thursday. We record every episode on video. I'm trying to get to the point where I can get those up on our YouTube channel. That does exist, but there's not a whole lot there yet. You want to tell them about socials real quick?
Yeah. Well, we've been trying that this ridiculous Instagram live. We're trying to figure it out, and we're horrible at it. But
we'll get it.
Yeah, we've been doing some of that lately, and I announced those. I take care of all of the social media. I make ridiculous videos that I'm still learning on our Instagram and TikTok, and I'm most active on Twitter. And as long as you're not selling me your body or cryptocurrency, or if you're not a podcast promoter, then I'm fine with you inboxing me. So if you're a podcaster or not, but just don't talk nonsense to me.
Wait, so the DM about my penis coin?
I've heard you're really deep into that, Dan.
Hey, yeah, I'm now selling penis coins. Are you interested, sir? I get called sir so often.
Is that Jade that I just hit?
Oh my God.
So sick of being called sir.
Anywho, and do we have a website?
Yes, we do.
What's it called?
And it's created by you, and you did a great job. www.designatedquizzerspodcast.com.
Yeah, buy stock in that.
Yeah. No.
No, don't do that. But that's us.
Yeah.
So thank you guys for asking us.
All right, we got to get us scheduled on yours next.
Yeah, absolutely. But with our guest episodes, you just, you'll have to listen to our next few and see what I do to our
poor unfortunate guest.
All right, Dan, take us home.
All right, folks, thank you so much for sticking around with us. This has been such a great episode. I want to thank you guys again, Jason and Lisa from Designated Quizzers. Check out their website, designatedquizzerspodcast.com. It's got all the information, or you can find them wherever you get your podcasts. This has been really great, but we got to close up the shop. After all, we can't stay open 24 hours a day. Not yet. Not until we hire a full staff. But anyway, until next time, happy trades.
Bye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.